Hey everybody, today's Wednesday the 26th, and the market, the S&P that is, did sell off further here today. It tried to hold that little area of prior support, but it is just a potential level of support as we know. The market bounced higher like we wanted to and then sold off. So, maybe you got involved on the short side. Hopefully, that's how you're looking at this market. And again, perhaps you shorted it over here in the afternoon after it touched the 2-day volume weighted average price and broke below the daily volume weighted average price. There was a nice decline, and it seems as though the likely scenario is that we will at least test this 50-day moving average. I think it's more likely that we continue down to the anchored volume weighted average price from the beginning of the year and from this low right here, which are both together just under 400. So that seems highly likely to me. The NASDAQ, the bottom line is it finished with a gain, but were the buyers in control? Well, let's take a look at the volume weighted average price. The average price that the NASDAQ closed at today was about 313, and it closed at let's just call it 312. So on average, they were down about $1, a little over a dollar. So just net change doesn't mean that the buyers were in control today. The sellers had control, maybe not compared to yesterday's prices, but for the action today, the sellers were in control, and they remain in control since the beginning of this week. It shouldn't be a surprise that these rallies fail with a declining 5-day moving average, and this is what we had previously sketched in. So, here we are down on the anchored volume weighted average price from this low. There's nothing to say it will continue to hold. It's a potential area that it can continue to hold. We saw, a decent bounce from it, of course. The bigger level is down also at the 50-day moving average and then the year-to-date anchor. We can put an anchor off the top of this peak right here, and that kind of flows together with the 50-day moving average. So this is the first more realistic level that this market should be able to drop down to at about 305 or so. The Russell 2000 continues to be garbage, just like it's supposed to be when it's in a downtrend. So, we broke below the volume weighted average price from that low. We broke this support, this short-term level of support after finding, a lot of people wanted to be bullish, and we were looking at saying, well, best case, I thought it might be able to get up to here, which didn't make it worthwhile. Instead, it breaks down, and we have a very clear pattern here, lower highs and lower lows. That means do not buy this market. You're a fool if you do. The semiconductors traded an inside day today. All of today's trading occurred within yesterday's trading. The low was higher than yesterday's low, and the high was lower than yesterday's high. So all the activity occurred within. But you can see here, we came up to the week to date volume weighted average price and that volume weighted average price from the beginning of the year. And so far, it's looking like sellers are defending that level. That's not a good sign for the semiconductors where the buyers have been in control all year. Now, it doesn't mean it's going to fall apart completely here, but you have to look at some of the components. Intel, for instance, is right on its year-to-date anchored volume weighted average price. AMD right on it. NVIDIA is obviously the large exception, but maybe this is carving out a top up in here. It's possible. It's not something I would short with a rising 50-day moving average. I'm more interested in looking at the index and saying, we've got now a declining 20 and 50-day moving average. That's not good. And, the anchored VWAP from the all-time high is right in this area. Maybe we're going to, over the next couple days, maybe do something like this, then bounce up, find resistance at the year-to-date VWAP, and then if we come down to the anchor from the low last year and the 200-day moving average, then things could get pretty ugly. And I don't see that as unrealistic or unreasonable that this market might in fact do that. The pattern of higher highs and higher lows has been interrupted here, at least for a deeper time correction, and possibly we're going to see a deeper price correction. So the market is being very clear here. The biotechs, I saw people talking about they were back above the anchor from this peak, and the more important anchor was here at the year-to-date high. I'm sorry, the beginning of the year, and I believe it was from this what was it? Maybe this low over here as well. Either way, the bottom line is that the sellers are in control. That's what it was from this peak right here. also is a place where it was offering supply. But right now, it looks like we're heading for at least a test of the anchor from the low in here. We came pretty close to it today, so maybe another $1.50 to the downside, and then it starts to stabilize. But I certainly wouldn't look to be a buyer in there. We've got a declining 5-day moving average. If I want to buy this thing, it's going to need to not only continue its price correction, but a time correction as well. And we have major earnings due after the close today. I'm not going to try to interpret what that means for the market overall, but the market overall is telling us be careful. Financials are right on the anchor from the recent low. There's nothing here to say it will hold in that level. It's a potential level of support. It's prior resistance as well. So maybe it's going to hold in here. The 20-day moving average people are probably disappointed, but it's on the anchor from this low. If we get a bounce from here, and then it starts to roll over again, I think it's lights out for the financials, that they'll probably go back down and revisit these lows. And if that happens, of course, that's going to erode a lot of confidence in the overall market. So a lot of warning signs here. The energy names have broken below that year-to-date anchored volume weighted average price as well. Here's the anchor from this year's low. So we're coming close to that. That might be enough to catch it, but we're also here with a declining 5-day moving average saying just don't be a buyer of it.